What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this weekend. So what we're going to be covering in this update is a little bit of the Ortex short interest utilization and specifically cost to borrow data that we've been looking at over the last couple of days to kind of give us a better indication of where we're at with that honestly really awesome data at this current time. We're also going to be going over the options chain and some of the really big problems that shorts have at this time. We're going to be covering the danger zone levels in terms of price. The honestly awesome price action that we saw last week that is really showing us that, well, the buyers are now back in control of the stock, and TD Ameritrade has been restricting the short sales of GameStop for some time now. Things are starting to move in our direction, and things could start to get very interesting pretty soon. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you have been seeing the immense success that people have been having with me, Masked Investors, and Review Dork's 1348 trading strategy and alerts. If you guys do want access to those alerts, we are alerting you for free on 5 stocks in our free part of our Discord. You can check that out down below. But again, guys, the one thing that I want you guys to keep in mind with this is you need to really take the time and educate yourself on how that strategy works if you are interested. You cannot just go willy-nilly buying alerts, because if you don't really know what you're seeing or what you're doing, you are going to get hurt. That's kind of why we like to kind of hold your guys' hand and make sure that you guys understand the strategy and are doing what you're doing. Understanding what you are doing is the most important thing. That's why we're doing those one-on-ones, those private live streams, to really make sure that you guys understand and nobody else can provide you guys that type of value. So AMC over here, $20.24 at close. That is an unbelievably awesome closing price. Now, a lot of people were kind of wondering, why was $20 such an important level? Well, a lot of people were thinking that closing above 20 would trigger somewhat of a gamma squeeze. That's not necessarily the case. There was only about 6,000 put contracts that that ran out of the money at 20, and there were only about 15,000 call contracts that ran in the money as well. So when you combine those numbers up between the unhedging and hedging, there's at a maximum about 2.1 million shares that would have needed to have been bought in order to hedge those options. But this is a very strong psychological level. Now, when we take a look at the chart here really quickly on the 4-hour with 1348, well, we see this 13 EMA cross above the 48, couple of closing candles above the 200 EMA. But the most important thing is that the price action is respecting this 13 EMA over here, and it is trending up. 1348 is kind of an indication of momentum. And what is this telling us right here? The momentum is going in our direction to the upside. So when we come over to the Ortex data over here, we're still seeing that 100% utilization, which honestly, guys, is still not necessarily completely accurate. I'm looking more at these shares on loan numbers right now because they're fluctuating, and we are still seeing new highs on, or new more recent highs on these shares on loan numbers. Remember, we saw like 131 million shares on loan this week. Now we're all the way up to 136 million. Now, when we take a look at some of this data down here, we have 3.56% max cost to borrow as of Friday. Then we had 2.55% average. We had a negative minimum cost to borrow over here, which is kind of nonsense, but 20.78% estimated short interest. Still very high. Now, before we kind of talk about what's going on over here, I want to show you guys what's going on with GME. So they had about 539,000 shares borrowed on Friday, 25.19% estimated short interest. But look at these cost to borrow numbers over here, 39.56%. GME closed above 150, another psychological level with high cost to borrow, super high short interest. Both of these stocks are looking absolutely nasty right now. Now, another one of the really big problems that the shorts are facing, besides paying these cost to borrow numbers, are these danger zone levels that we've talked about in the past. Now, when we look at this one right here, when we look at average days on loan of any of these shares, it tells us when some of these shorts are really piling in. Now, this range right here from January 10th all the way down to January 24th, well, let's take a look at the daily chart over here and see what happened with this. So when we look at January right here, so we saw a pretty significant knockdown in the price all the way from about 22 all the way down to 14. So we are sitting right in the middle of kind of the closest danger zone that we have for the shorts. So that is a really, really, really important stat and data point that we need to look at here. It's okay, where did the shorts start to pile in? Well, it was right around 22 to 20. They were trying to knock it down. If we run through there with higher cost to borrow, higher margin requirements, everything kind of freaking out in the overall market, that is a very big problem for these short institutions. The other thing that I want to talk about here is this daily 13 EMA, 200 EMA cross. Now, we're not necessarily there yet on AMC, but we are very, very, very close. On GME, well, they've already done it. So they're a little bit ahead of us in terms of kind of like a breakout level. We did get this candle above this 200 EMA with, well, we're about to get that 1348 cross as well. But I want to show you guys what's happened in the past when we've seen these daily 1348 EMA crosses with a break above the 200 EMA. The only other time that we have seen price action coming up like this was right before last January. You saw the 13 cross above the 48, closing candles above the 200, and AMC ran all the way from 490 all the way into the $20 range. The technicals on this chart are screaming absolute buy. That is another really, really significant issue that these shorts are facing right now. And here's the other thing that I want you guys to think about. Remember, the fundamental short thesis on AMC doesn't necessarily make a whole lot of sense anymore. So we were kind of theorizing a while ago, well, a lot of these shorts that are starting to pile in right now are more likely to be shorting based on technicals versus the fundamentals of the company. Now, what's to say when the technicals then start screaming buy that they are not going to start covering their short positions? And again, these aren't these manipulative short sellers that we've been kind of fighting against and talking about. These are kind of a secondary group that I kind of label them as that have been a really contributing factor in this rundown that we've seen over the last couple of months. But what's to say that they're not going to cover their positions, input more buying volume there, and then start buying the stock to go long on it because, well, they're technical traders and they know the stocks can run like this. So that is something that we have to look out again for, that these shorts that are in it right now, probably these technical shorts probably won't be in it for very much longer if we continue to see this price action, and they could just as easily switch to buy. The other thing is the volume on the options chain last week was absolutely insane for AMC. Now, we didn't necessarily see it quite calculated and transferred over into the open interest that we were seeing before, or that we were saying before. Remember, open interest is the amount of contracts that people are holding in their brokerage accounts, and volume is the amount of contracts that have been traded. So if we continue to see that amount of volume and price start to increase on AMC, you guys can kind of see here that there are so many bullish factors that we are looking at that really only signal a potential big price movement to the upside. Now, I want to quickly cover this situation that's been going on with TD Ameritrade right here. We've seen some things start to come up like this in the past. So we can see right here, symbols AMC. We may also implement additional requirements on opening trades on options that expire. So what they'd essentially be doing is just changing around the margin requirements on options. Usually they just make it 100%, or they will just not allow the selling of naked calls, because selling naked calls is more risky than shorting, because the velocity of how fast those contracts can appreciate can absolutely blow out any one of these TD Ameritrade clients. But for GME right here, short selling of the stock is not allowed at this time. Remember, back in June, we saw this starting to pop off after we started to see the runs. We saw Goldman Sachs. We saw these big banking institutions that were no longer allowing the short sales of these stocks. And it's starting to happen again. So now, when we think about kind of what's going on here with a lot of this different data that I've provided you, everything is kind of screaming bullish. Now, it is very, very possible that we are going to see red days every now and again now going into a potential big price run up. But I think we're kind of ready for a nice move to the upside based on all of the data, kind of where we are in kind of the cycle, the cyclicality of how AMC and GME move. And we're also continually getting some really, really solid fundamental news about these companies almost every single week. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.